Hi there, welcome to Your Money and Real Estate. Today we've got a fantastic show. We've got a fella named Kevin Mitchell. Kevin Mitchell, just before the break, he drove all the way from Wallaceburg, Ontario. Now, anyone who calls and can identify Wallaceburg, Ontario in 30 seconds will get a $50 because Wallaceburg is in the middle of, I don't want to say nowhere, because what if Wallaceburg people are saying, but you said when you got here, it was in the middle of nowhere.
Yes, basically. Yeah, that's the best way to explain it, especially coming up here.
Yeah. Anyways, welcome to the show, Kevin.
Thank you very much for having me today.
No problem. Kevin, now you've got a lot to say about real estate. Just in the brief time that we've chatted, you've got some books, you've got some programs, you've obviously got a ton load of experience with real estate. But for some of our viewers, obviously, that don't know you, as myself, tell me a little bit about yourself and how you got into the real estate biz.
Okay, well, I'm a teacher by trade. I graduated Teachers College back in 7 years ago now.
Okay.
And at that time, when I was actually in Teachers College, started reading some wealth building books, Robert Kiyosaki's Rich Dad, Poor Dad,
Sure.
and a lot of other ones. And as I was reading, I realized that the old definition of safety and security, getting yourself a good job,
Sure.
working hard,
Yep.
saving your money was a path to achieve what everybody else was achieving, which is who knows what the future has in store.
Yep.
So I decided wanted to start my own real estate investment business.
Good for you.
But being a history major and a teacher, I really didn't have the business background. So my brother, Erik, he was going to the Richard Ivey School of Business at the time.
Okay.
So I spent about a year and a half working on him. I got him to read, Rich Dad, Poor
Sure.
Dad. Took him to a couple different seminars to get to wet his whistle.
Yep.
And 5.5 years ago, I convinced him to come into business. And at that point, we both quit our jobs, and we've been investing full time ever since.
Wow. So for 5.5 years, you guys been doing this full time?
Yes, we have. Yeah, and it was quite the experience so far, especially at the beginning. We come from a really middle class background. Stay-at-home mom, dad worked for the
Sure.
town of Wallaceburg.
The only job there, the one job.
The one job, exactly, as a road maintenance supervisor.
Yeah, that's right.
So when we started, we were both in debt big time from school, and then just had basically our parents' savings to start investing with. And as such, we had to focus and find a way to make as much money on the money that we invest as possible, and it's all kind of grown from there.
Now, I do know where Wallaceburg is, as in my past life I was a traveling salesman, and I drove through Wallaceburg, and I gotta say, from a real estate investing perspective, there isn't much happening in Wallaceburg.
There isn't, no,
Sorry
exactly.
to be putting it, but like that, how else do you say it?
Yeah, and
if you blink, it's gone.
If you blink, it's gone. And the thing was, it's an automotive-driven town.
Yes, that's true.
And so, 70s, 80s, 90s, it was booming. All kinds of jobs everywhere. You could quit. I remember my dad talking about when he graduated, that he could go into one factory, quit his job, the next day get hired just down the road.
Yep.
But as the slowdown in the automotive industry occurred, Wallaceburg became ghost town, and it really has transitioned. There's not much jobs there, high unemployment rate, and a lot of retirees are moving in.
Yep.
So we started our real estate investment business there. We bought a few properties. That's kind of how we cut our teeth.
Yep.
But quickly we realized that our parents bought our house 20 years before, and it was still worth today what it was worth back then.
No.
I know for people in Toronto, it's hard to believe, but
Yeah, but that's an interesting take, because I know that, obviously I live and breathe real estate like yourself, and a lot of people, and I've come up with the saying that appreciation is speculation. So when you base a lot of, for people out there, you're saying, okay, I want to buy a property, and you factor in appreciation. I say, well, that's a speculative type of concept, because appreciation is something that's happening in the future. In terms of deciphering a property, it's always better to say, what are the numbers today, and what if they doesn't appreciate? Am I going to still make money on the numbers today? So you're proof of that, and it's hard to believe that an actual, as you said, a place. So there it goes on record that a place didn't appreciate after 20 years. I hate to say it, but it's
exactly. That might be a bit of an exaggeration, but basically,
I know what you mean.
But basically,
relatively speaking,
and you bring up a great point, because that's when we cut our teeth. That's all we could base it on is cash flow. Cash flow is king. So when we purchase properties, and in Wallaceburg, our first property we purchased was a fourplex for $164,000.
Wow.
So again, it's all relative. Obviously, the rents were less, but the cash flow was better. But once we,
again, stepping back, and I didn't mean to cut you off,
no problem.
but that fourplex in Wallaceburg, I mean, the economy. What sustains a renter? Like, how does a renter even live in Wallaceburg?
Yeah, exactly. And
So I'm just trying to figure out. Okay, and I can certainly understand there's probably not that many rental properties in Wallaceburg to begin with, but I didn't think there'd be that many renters to begin with. You know?
Yes, and that's why we quickly moved out of Wallaceburg, because you're right. And the less renters, it's tougher to find good clientele, and beyond that, with no appreciation, you're stuck with your cash flow. So,
that's right.
we'd find properties achieving anywhere between 7 and 11% return every year from our investment on cash. But when you're sitting there just with mortgage, which is very good. Yeah. But the property values being lower, you're able to do that.
Yes.
So we realized quickly and started doing some market research. We talked a little bit about Rain Canada.
Yep.
We joined. I got a membership with them, started doing some research and realizing, hey, Toronto, Barrie, Kitchener, Cambridge, Waterloo area, even Hamilton. I know that's a dirty word here in Toronto.
No, Hamilton's a great town.
It's a great town. All of a sudden, you start looking at the statistics and seeing the appreciation. 3, 4, 5, 6% a year over 5, 10, 15-year period, and it's like, okay, all of a sudden, if we can find a way to make 6 to 10% return on our money from cash flow, plus factoring the appreciation and mortgage pay down, all of a sudden you've got yourself a pretty attractive investment.
Yeah, and I want to stress that you don't want to factor in your reason for buying a property is appreciation. Your reason to buy it is the cash flow, the economic fundamentals, all those things. Appreciation to me is like the cherry on top of an already great property. Like don't specifically buy because I heard we got 100% appreciation. That can end tomorrow. Kind of thing.
And that's a great point. That's the way we say it the same way. I say cash flow is our meal, and the appreciation is the gravy poured on top.
Bingo, yeah.
You can still enjoy your meal without the gravy, but the gravy makes it taste a lot better.
That's true. Well, it depends what you're eating, but
yeah. But in what you raise a great point, because even especially being up here and talking to a lot of certain investors and certain types of investors in Toronto that are speculators, and that's why it's hard to even call them an investor. But when you're purchasing negative cash flowing properties in hopes that in an expectation that it's going to continue to raise in value, that's a very risky way to invest.
Huge, yeah. And I personally don't endorse that at all.
Yeah, and you can be successful. And there's been a lot of people that made a lot of money. Yeah.
And a lot of people can prove me wrong on that, saying, I did this. But I'm just simply saying that if you're buying in hopes of a future value, you can never hope on that. You gotta go right today. What's in my hand right now?
Yeah, and the thing is, that's why cash flow is king. That's why cash flow is your meal, because without your meal, you're going to starve to death. So as long as you continue to buy properties that make you money every single month, after all expenses are taken into consideration, it doesn't matter what the market does. You can sleep good at night every single night knowing that your property is making you money every day. Hey, if it appreciates, you're going to make even more money, but as long as you buy properties that put money in your pocket every month, that's the safest, most secure way to invest.
Now, we got a lot to talk about, and obviously you love real estate and you've done a lot of deals, but tell me, you've written books, and how did you sort of transition from doing your own business into the idea of writing books and getting into that side of the business, I guess?
Well, that's a great question. And and what it was as Erik and I, both of us are working 50, 60 hours a week. So, we figured out we have over 25,000 hours invest into growing our real estate business.
Sure.
And over the course of time, you run out of money. You have to attract other people's money. So that's how we were doing, going out to talk to people and say, hey, joint ventures, you've said you've covered in the show quite a bit. So through joint ventures, we went and talked to people and said, hey, instead of leaving your money in the market and make nothing, invest with us. But the more we talked, the more we realized only a certain type of person wants to passively invest in real estate. There's a lot of people that want to do it themselves.
Yeah, I agree with you that they like to talk about it. They feel uncomfortable in a trust factors. Who knows, whatever the reason, but you're for sure the majority of people that say they want to invest in real estate want to do it themselves.
Yeah, and the problem was we said, okay, well, we can't teach each person individually how to, what we've done, because over those 25,000 hours, we continued to refine and develop systems and procedures to make sure we're investing in the safest, most secure way possible. So every $10,000, $15,000 mistake was well documented and found a way to make sure it didn't happen again. So as we continued on in our business, from each and every deal, our systems and procedures were really create a safe and secure way to invest.
Yep.
So getting back to it, I basically wrote some ebooks. We've got a real estate investment course now that teaches people, an A to Z way how to safely and securely buy themselves a duplex or a triplex, and get their money out of the market and get a nice piece of property.
I want to remind our viewers that this is a call-in show, and what a fantastic opportunity to call Kevin about any questions you'd have on investing, because it's ebook. He's also got a book called Bank Conspiracy. But before I get into that, I did want to ask you. So you obviously moved up. How many properties did you do before you said, you know what, it's time I wrote a book?
Well, we did over 40 real estate transactions.
Wow.
And it was beginning of 2011 when we decided to start informing people. And it really, from day one, it was our mission to help, Canadians. At first it was our family and friends, and then it went out to Canadians, and that's really our goal now, is to help Canadians realize that the banks aren't your friends. That's what the Bank Conspiracy ebook is. We'll get into it in a minute.
Yeah,
But
sure.
it was after about 40 deals and about 20,000 hours into our investing in our business. It's like, okay, we really have a great model here that anybody can kind of tap into, and it's very repeatable, a repeatable way to make 15% plus on your money.
Right.
We thought, hey, if we can share this, instead of trying to talk to people about investing passively with us,
Yep.
hey, we'll teach them exactly how we do it. Because with real estate, as you know, there's enough fish in the sea to feed everybody.
Oh, yeah.
So there's no such thing as competition.
Yeah, and that's why, and there's a lot of camaraderie amongst other real estate investors, because there's just so many deals out there. The best thing to do is that you and I would become friends, because who the heck knows where we're going to bump into each other, down a deal in London, whatever. And that's how I look at it, is you never want to burn a bridge in real estate.
No, exactly. And like you said, it's a nice part. Like, everybody has their niche, and no matter, even if somebody takes our course, for all the members in our course, each one's going to kind of say, okay, I like this investment strategy better than this one. And there's so many different areas, and yeah, it's a great thing. And ultimately, like, in getting back to the ebook, if people can start getting their money out of mutual funds, get their money out of the market into a real physical asset, achieve true diversification. All these commercials talk about diversify your investment portfolio. It's complete and utter crap, to put it lightly.
Yeah.
And it's like it's time Canadians start educating themselves financially and taking control of their financial future.
So your course is obviously based on purchasing or transacting over 40 properties, making it sounds like you made a ton of mistakes.
A ton of mistakes, yes, and you know as well too. In real estate investing, there's so much to know. You can't not make mistakes along the path.
Yeah, in fact, you'll always be making a mistake somewhere, because you might, and a lot of it I have always talked about is based on a relationship, where you would get to know someone, and as I found that as you get more and more into it, the deals you're starting to do are based on who you know, and creating relationships, and then getting a VTB, getting a certain financial structure that is favorable. But you don't get those things, you don't get those favorable deals until you have a relationship.
Yep.
So I'm assuming that you guys have created a whole teamwork of people.
Yeah, and then that's part of the course. The nice part is as we grew, we took we spent tens of thousands of dollars on continuous education, because both of us having a university background, we feel no matter what you're going to do, make sure you know as much as you can about it. And as we were trying to grow our business, there was just not a complete course out there that, especially for investing in Ontario, there wasn't anything complete. So we have the course, we have a membership form, a power team, like you mentioned, because even our power team ourselves was, having a bad property manager can cost you thousands of dollars. Having a mortgage broker that doesn't, get you the best financing possible. We started doing renovation work at the first couple, and we didn't hear about this thing called mortgage plus repairs. Even something as simple as mortgage plus repairs, where the bank pays you and covers every single repair you do to your property after you purchase it, can leave money in your pocket, so you can go and buy yourself 2 properties instead of 1 or 3 instead of 2, or whatever the case may be.
Actually, I've never heard of that mortgage plus repairs, but
you haven't? Well, I mean, that's one of the
I gotta
strategies
sign
we
up.
use. Yeah.
Now we're going to be coming into a quick break, but before we go, I just want to talk a little bit. So you got a course, but you also got a book called The Bank Conspiracy. Now I love that word conspiracy. It sounds like a movie, but quickly, just give us a quick rundown on what that's going to be, what's that about?
What it's about is basically there's no, and I'll be as quick as possible here, but there's all kinds of.
Actually, I just got the word. We're gonna have to take a quick break. We'll be right back on Your Money in Real Estate with Kevin Mitchell and the Bank Conspiracy Guy.